Well, P2P lending was designed to bypass traditional lending by matching individual borrowers and lenders. Now, it began to flourish in China in 2011 as the government encouraged the wider use of technology to expand financial services to small businesses and individuals. At its peak in late 2015, there were more than 3,300 operating platforms. Loose regulations allow P2P lending to quickly become a multi-billion-dollar market as lenders offered high returns to investors. But some turned out to be Ponzi schemes. And one of the most high-profile cases was Akuffo, which swindled 900,000 investors across China out of more than $8 billion. Well, the number of platform failures and scams are an alarming risk to China's financial system. For more on that, we're joined by Martin Chorzempa, Research Fellow at the Peterson Institute for International Economics. Thank you for joining us.
Thank you for having me.
So let's start with what it is that makes peer-to-peer lending so attractive as an option in China.
Well, investors are used to things being guaranteed, and so far P2P platforms have said that they're guaranteed. And in the past, the interest rate they could get on deposits at the banks were capped by the government at a very low amount. So there were very few good investment options available. P2P lending at 12% or 18% or sometimes even more looked pretty good, even though it's quite clear that it's risky.
And we certainly saw that even though some people know that it's risky, still willing to invest in it. So give us an idea of the size of the market and what the big risks are.
So the outstanding loans in the market are about 1.3 trillion renminbi. That sounds like a lot of money, and it is, but it's actually about 1% of the amount that banks have outstanding. That's about 135 trillion renminbi. About 3.3 million people have invested or are currently investors in the P2P platform. So although it's large, it's still a tiny part of China's financial system.
So in terms of the holes in regulating this sector, what are the real issues?
What's interesting is that they actually have very good rules on the books. The China Banking Regulatory Commission a few years ago put out rules that would have eliminated many of these risks. The problem is if you impose them all too quickly, all of these platforms will fail, or many of them would have failed very quickly, and that would cause stress in the areas that they operate. So they have so far not implemented them. The other problem is that they rely on local governments to implement the rules. And local governments are always overburdened with too many other responsibilities, other frauds and Ponzi schemes to deal with. And it's impossible for a local government to regulate a gigantic company that has loans and investors all over China.
So what would be a good way to implement this in a way that doesn't result in a lot of these failed or illegal P2P lending platforms?
Well, I think many of them are going to fail. My prediction would be that maybe a few dozen platforms continue to operate in the medium term in China instead of the 1,600 or so today. So it's really a question of when you take the pain. Do you take it now when it's relatively small, or do you wait? If they would have done it a year ago, it would have been 43% smaller.
And what do we know about what sort of recourse is available for people who do lose their money in these schemes?
Well, in Hangzhou, they had to open up 2 stadiums to accommodate the number of people that have come in asking for their claims. It's extremely difficult for them to track down, especially if the platform was a fraud, just if there are any assets at all that you can try to go for, or if they just simply took the money out of the country.
Now, what about lessons that could be learned from other countries and how they regulate the sector?
Well, no other country allowed P2P lending to get as large as the Chinese authorities let happen. In the United States, the 2 major platforms actually went underground for a little while they were able to comply with regulation, because the Securities and Exchange Commission required them to comply with quite onerous rules, and then more were added on later. The UK is generally viewed as the best example because they worked quite well with the industry groups and managed to come up with a new regulatory framework that would make sense for P2P instead of either doing very little or applying too much.
So what advice would you give to some of these individual investors looking at this and wondering if they should get involved and what they should be on the lookout for?
Well, I think they should listen to the head of the banking and insurance regulator, who recently essentially said that if the deal is too good to be true, it's giving a really high return, there's also going to be a high risk. And just because they say it's guaranteed, you shouldn't necessarily buy that. So
what are your expectations as this sector continues to mature? How do you see it developing?
I think it's going to be an important part of China's financial system going forward. A few of the large platforms that have invested heavily in compliance and working with the regulators and also working with the banks so that they're not actually touching the money themselves. It runs through the banks. That reduces the risk that they could run off with it. I think they'll continue to grow and continue to do well. There's an enormous quantity of underserved borrowers, from entrepreneurs and small, medium-sized companies to individuals looking for a loan that they can't get from a bank. And many people are still looking for investments, even if they're risky.
And just quickly, what would you say would be the top challenge to growth in this sector?
Oh, it's going to be the lack of confidence coming from the increasing number of platforms that have failed. About 12% of platforms failed in the last month alone.
Well, certainly some staggering numbers there. Thank you. Always good to have you. Martin Chorzempa there of the Peterson Institute for International Economics.